Hello, good morning, everyone. We're preparing for the webinar. Hi.
Hey, Florin, how are you doing, my friend?
Good morning, Guido. I'm so excited. I'm looking forward to connect with our audience today, and we are preparing for the webinar. Right now, I'm connecting with the other computer to make sure that we can also start properly the presentation.
Okay.
Okay, yeah. just a moment to put myself, because I'm hearing myself.
Okay. Did you go through the amended script? Because I made some changes. Did you see it?
Well, I saw that you make some changes, and did you change any question?
I didn't change that itself, but I changed the transition towards the questions.
Okay, definitely you are the leader here, and then you take the discussion. I will follow what you said there. In the meantime, just a second to connect also with this my other computer to make sure that I'm connected.
Yeah, so you take care of the presentation, right?
Yes.
Okay, perfect.
But anyway, just in case, I'll try now to make sure that everything is all right.
Yeah.
So I had the time to put part of the questions. So I will talk about the other questions. So basically, I'll put myself in the screens of the people that are watching the webinar. And some questions I cannot ask on the screen, but I will ask the questions, and then I'll give some of the answers and give some seconds to the audience to answer to themselves what would be the answers that they would give, and then you explain what are the correct answers, because the first four questions I managed to put in the webinar, but the other question not, because it takes a lot of time to put the questions in order, you know.
So Florin, once I've completed my introduction, I say, hey, Florin, since you're a professional investor yourself, is there anything we should ask our dear audience before we proceed? And then you jump in, and then you ask four questions, right?
Yes.
And basically, after settlement, you know, I also explain what settlement is, and then I say, hey, Florin, does all of this make sense to you? And then you say, absolutely, Guido. All of this is very interesting, but how can you make money with Bitcoin perpetuals?
Yeah.
Right?
Yes.
Okay. And then you also ask, then you also ask number 6, right? So I say, all right, my dear money magnets, following monetization, a logical next step is to discuss the costs involved in BTC spot and BTC perpetual futures. Then I explain what it is. And then you say, hey, very informative, Guido, but this does raise the following question. Dear audience, what's your risk appetite? Okay, so I'm basically going to announce you.
Perfect. Yes, we'll do it like that. Just a second to connect the other my laptop to the webinar, because so just a second to see what is the audience here. Okay. Hey, we have already someone here. I think is one of your contacts. Have a look on the Guido.
That's amazing.
Okay, welcome, Marie. And good morning. By the way, I'm having my tea. I hope you have also.
Yeah, I'm also having my tea, and I'm not even from England. I'm from Amsterdam. Can you imagine?
Very good, very good. Let's see here. Just a second to see here. So we have still 5 minutes left. In the meantime, I will try to connect because I do not know why I cannot manage to connect. Just a second.
Yeah, sure.
Okay. So it's
Nice food, by the way.
sorry. Yeah, thank you very much. Thank you. Yeah.
Hey, I think it's Laura Mickelson. Good day, good morning to Marie Laura. Yeah, I sent you an invite, Marie Laura, and I really appreciate that you join us. So hopefully you'll get something out of it.
Yeah, almost there. There, just a second to see what's happening here. Okay, just a second to try to put another email here. Just a second.
Can I get some more tea? Do you have some more time or not? Can I get, yeah?
Yes, you have time. You have time.
Can I get some tea?
Yes, you have 5 minutes time. It's okay. Take your time.
All right, I'm back again.
Perfect. Just a second to see where is my. We are live also on YouTube.
Oh, that's great. The more the merrier.
Okay, just a second. So for all our audience, we have also Q&A session. So if you want to ask us or me or Guido any question, Marie, you can ask. You have the Q&A session. It's open to ask questions.
Yeah. And it's not sure that you can answer all of your questions this session, but if we cannot, then I'm probably going to send you a direct message or we're going to have a video call. So we'll make sure we clear all of your questions.
Okay. Okay, one second. Just a second because so I see another attendee, but I do not see myself basically because I need to register myself. 1 second. Oh, this technology, it's amazing, you know, especially when only one moment, please. Registration. Okay. Because I don't see myself here.
It's a pity because you're looking good.
Yeah, thank you. So basically, is it able? Are you able to? I think in this case, I will share my screen while you are speaking because I see that my laptop is very slow today. So while you speak, I will share my screen.
Yeah, that's fine. So basically, show the presentation to our audience.
Hello, Stephen. Welcome to the webinar.
Hey, Stephen. Good day to you. My name is Guido. This is my friend Florin. So nice to have you here. Yeah, as you see, we are still tuning in a little bit, doing some technical stuff, but we are almost ready.
Okay. Good morning, Caroline. We know that you are here, so another 2 minutes. Yeah. Another 2 minutes left to start this. Okay. Hi, good morning, Onjan. Okay, and one more minute and then we start. Good morning, Jarno.
Jarno is my close friend from Amsterdam, Netherlands. You know, actually last weekend we grabbed a glass of wine together. So we're very, very happy to have you, Jarno. Thanks for joining us.
Awesome, awesome. So 1 more minute left and then we start. I'm going to share this the screen so it's easier for us to prepare.
Yeah. Sounds good.
Okay, just a second. So 1 more minute.
There's also another Jarno, even my business partner here. So we got 2 Jarnos. You know, Florin, have you ever seen 2 Jarnos in one video call?
No, this is unique.
I don't think you have, right?
Awesome, awesome, nice. Just a second to see here. So just allow me only 1 more minute, please.
Yeah.
So just a second to.
So you guys can see who's a technical guy, right? It's not me. It's Florin today.
Yeah, yeah. Okay, so did you make a change on the presentation? We don't. It's should I?
Yeah.
Okay. Do you have it ready? By the way, I think it's easier to share it yourself because I'm saving the Google one, the Google version. I can share the Google version.
Yeah, that's fine. Please share that one.
Yeah, we'll share that one because it's easier like that.
Yeah. There's Jan Gottschalk. Based your name, I think you are from German. Bist du Deutsch? You probably are. Well, thanks again for joining us.
Awesome. Okay, so we are preparing for the webinar. Just a second to start with, to start sharing. So, wait a moment. Good morning, everyone.
There's Sylvia. Good morning to you, or good day to you. I'm not sure where you're based, but glad to have you here.
Awesome. Good morning, everyone. Thank you very much for taking the time to participate into this event. We are looking forward to add value to you. My name is Florin. I'm your host today, and together with Guido, which is the co-host, will explain a little bit more about Bitcoin futures and what are the benefits and risks, and also the profit opportunities that we have in this webinar. First of all, thank you very much, Guido, for participating and for being here. I'm so happy that we do this webinar, and I'm looking forward to add value to our audience. Thank you very much. The word is to you.
Yeah, thanks, Florin. So thanks again, guys, for tuning in. My name is Guido Lassalli, and I'm today's co-host. Please watch this carefully because this is a webinar like no other. You're about to find out how to generate a passive income with one of the most sexy and trending asset classes, Bitcoin Perpetual futures. So as a multi-asset trader myself, I've closely monitored the rise of Bitcoin Perpetual futures. And after getting a sense of the opportunities and risks, I started to trade it myself in early 2018. And not much later, I actually met this guy that also joined our video call, Jarno de Vries, who's also a well-experienced trader. And together we launched a Dutch-based fintech company called Untitled Chapter, which is actually going well right now. Our daily bread and butter is the range maker. It's a unique trading algorithm specifically designed to make money with Bitcoin Perpetual futures while you sleep. So it's successfully being used by 90 professional investors across the globe. Hey, and Florin, since you're a professional investor yourself, is there anything we should ask for the audience before we proceed?
Yeah, definitely. We should ask the audience a question. Let me launch the first poll. 1 second, please. So, sure. Okay. So let's see. So the question is, what are the main differences between BTC spot and BTC perpetual? Let's see our audience today, how prepared it is. So you have an option, BTC spot and BTC perpetuals are the same. BTC spot supports leverage, BTC perpetual supports leverage. And the big question, you don't have to own BTC to trade BTC perpetuals. Okay, I give you a few seconds so everyone can answer to the question. Okay, 6 more people left to vote. Okay, what do you think about this question? Okay, I think you have enough time. So I see that most of you, you answer to the question C and D, BTC perpetual supports leverage. And you don't have to own BTC to trade BTC perpetuals. Like 33% said this, and 56% said that BTC perpetuals supports leverage. And only 11% answer BTC supports leverage. BTC supports leverage. Okay, Guido, what is your answer to this?
Yeah, so there are 2 correct answers. The first answer is C, BTC perpetual supports leverage. That one is right. And D is also correct. You don't have to own any BTC to trade BTC perpetual futures.
Awesome. Okay, so now I have another question to the audience in order to make sure that you are prepared for what's coming with the presentation. So how to generate a passive income yourself with this exciting asset class? I'm so excited about it today. I want to do it myself is the first option. Receive help from us is the second option. Be the superhero is the third option. And be the collector is the fourth option. So let's see the your answer, please. We are really looking forward to get to know you. So please take a few seconds and answer to this question. Thank you very much. I hope you have your tea. I'm having my tea. By the way, such a good moment to enjoy the morning. I'm so excited about the day trading. Okay, so I said that 33% vote, I want to do it myself. Awesome. And 22% said that you want to receive help from us. Awesome. And 11% they said that they want to be a superhero. Awesome. I really love a superhero. And 23% answered that they want to be a connector. So what do you think is the best? What will be the best answer here, Guido?
Yeah, so first of all, do it myself is correct. So there are a lot of handy people over here. And there are also a lot of bridges, because another correct answer is D, be the connector. Be the connector between yourself and, you know, other smart people that can help you out in the field of algorithmic trading. So A and D were correct.
Awesome, awesome. And I have another two questions for the moment, and then we start the presentation. So the next question, it will be, what are the biggest challenges and risks of the algorithmic trading and BTC perpetuals? The first risk, it will be lack of knowledge, lack of IT knowledge. Second one, no trading experience. Third one, don't know how to capitalize on a down trading market. And the fourth one, I'm an experienced trader and I understand the risk of algorithmic trading. So our dear audience, please answer to this question. And the next question on the same pool, the second one, it will be, what are the key elements of a successful trading algorithm? Answer A, one or more technical indicators. B, loose risk management. C, high drawdown. And D, secure hosting environment. So please answer to these two questions, because we want to know you better and understand your level, so we can adjust accordingly. Okay. So I see that most of you, 40% voted, don't know how to capitalize on a down trading market right now. So still other people left to vote. I give you a few seconds so you have time to think about the answers. I see that also we have a 20% experienced trader here. Awesome. It's a perfect place to be here. And I see that you have 20% no trading experience and 20% lack of IT knowledge. And to the second question, the answer is to the question that what are the key elements of a successful trading algorithm? 80% voted one or more technical indicators, and 20% voted loose risk management. So I will stop this pool, and I'll share the results. And what would be the correct answer, Guido? And how do you translate this so we can make sure that we add value to our audience today?
Okay, my dear quizmaster. So for the first question, what are the biggest challenges and risks of algorithmic trading in BTC perpetuals? There are three correct answers. The first one is lack of IT knowledge. The second one is no trading experience. And the third one is that you simply don't know how to capitalize on a downtrending market. Then we go to the next question, if you don't mind. The next question was, what are the key elements of successful trading algorithm? Well, here there are only two correct options. Option A is one or more technical indicators. And we're going to show you in a bit how exactly that works. And the last one is also very important, right? You have to be better safe than sorry. You need to have a secure hosting environment to be successful.
Awesome. So now we have all these questions. So I will start sharing the screen to make sure that we go on the actual presentation and we are efficient. So just a second.
Sounds good.
To start the screen sharing. Okay. We'll share the screen, and here. Second. Almost there. I hope you can see the screen, my screen.
Yeah, I definitely see your screen. That's perfect. All right.
Okay. So exactly as the title says, how to generate passive income with Bitcoin futures. So Guido will continue with this.
Yeah, one second. I'm also ready.
I'm so excited about the today webinar because I see a lot of value, and I see it's enlightening for me, and also I hope also for our audience today. By the way, thank you very much. I really appreciate your time to be here. We hope that we will add a lot of value to you.
So I think what we do, Florian, I mean, let's go straight to sheet number 2. That's basically Bitcoin versus perpetual futures.
Okay.
All right, perfect. Okay, guys. So what do we see here? First of all, I'm going to explain to you the difference between Bitcoin perpetual futures and spot trading. And to support this, I've added a table, which you see, which basically compares the Bitcoin spot asset class with the Bitcoin futures asset class based on 8 categories. And I want to begin with the definitions. So, you know, guys, unless you've been living under a rock for the past few years, you're probably familiar with Bitcoin. Bitcoin is the world's premier and most popular cryptocurrency, as well as a global means of payment. I'm not sure if you've ever done a payment with crypto, but I can tell you I've done it several times, you know, on holidays and even back home in Amsterdam. I once bought a beer with Bitcoin. You know, another thing, it's also the first decentralized digital currency that works without a central bank. And, you know, those who follow the news, you know, have learned that El Salvador nowadays is the first country that has declared Bitcoin as its national currency. So what you need to understand is that while Bitcoin is a digital asset, Bitcoin perpetual futures, on the other hand, is something completely different. It's namely a financial product that's created to predict the price of Bitcoin. Yeah, so it's a digital asset versus a financial instrument, financial product. Okay, so now that we have defined these two assets, let's go on with the second category, purchase. So when you buy a Bitcoin, you become the sole owner of that Bitcoin, right? You can store this in a wallet on the exchange, but if you're not going to trade it, I advise you guys to better store it on a secure external wallet. And in the case of Bitcoin perpetual futures, however, you become the owner of a contract. And I can imagine if this is new for you, it could be interesting if I explain to you how this goes. So if you expect the Bitcoin price to go up, you buy a long contract. But if you think the price of Bitcoin will go down, will go south, you purchase a short contract. And you know, there are also some platforms that provide opportunity to hold both a long and also a short contract simultaneously, which is called hedging. This basically means that any losses from the first position can be offset against the profits from the other position. So it's literally a way to hedge your risk. All right, so since we have no time to waste, and I'm a big talker, I want to proceed with collateral. So in the finance world, you know, and I'm not talking about moves like collateral damage. In the finance world, collateral stands for underlying asset. And in the case of Bitcoin, the underlying asset is the Bitcoin itself. But for Bitcoin perpetuals, the collateral can be different types of assets. It may be different per platform, but you know, cash, crypto, and even gold and stocks like Tesla are commonly used to serve as collateral. So when you open a long contract with Bitcoin perpetuals with Tesla, for example, as collateral, you would earn more Tesla if you close the contract in profit. Or to give you another example, if you open a short contract with Bitcoin perpetuals with gold collateral, you would end up with more gold, you know, either more physical gold or more digital gold if you close the contract in profit. So yeah, I hope you're now ready for the fourth category, because this is perhaps the most exciting, but also perhaps the most dangerous one. Let's talk about leverage. So unlike Bitcoin, BTC perpetual futures offer the ability to trade with leverage. With leverage, you can use a temporary loan to open a larger trade with a smaller amount of invested capital. So I'll give you an example, right? If you trade without any leverage and invest $1,000, for every 1% move in the market, you gain or lose $10, which is equal to 1% of $1,000. But in comparison, if you invested the same $1,000 and traded with 10x leverage, the dollar value of a position would equal to $10,000, yeah? Because 1% of 10,000 equals $100. So for every move in the market with 1%, you win or lose $100. So what you need to understand is that with leverage, you can amplify your profits, but you know, it's also very risky when the market goes against you, because in that case, it amplifies your losses. All right, so we covered most of the categories. Now we're off for settlement. In the case of Bitcoin spot, there are two ways to settle a transaction. One is directly between the buyer and the seller, which is also known as peer-to-peer. And a good example, Florian, is that I send you one Bitcoin from my wallet to your wallet, and you pay me accordingly. I mean, at least that's what I hope, Florian, after this webinar. And the second way is through an intermediary broker, namely the crypto spot exchange, where the execution of the transaction is taking place. So the BTC Perpetual contracts between a buyer and a seller are also settled through a broker, namely the clearing division of the Bitcoin Perpetual futures. So to sum up, with Bitcoin spot, regular spot, I can transact with you directly, but of course can also transact through an exchange. And with Perpetual futures, I can only transact to you through an intermediary party, through the clearing division of the platform. So Florian, does this all make sense to you?
Yes, it all makes sense, and I would like also to answer just a second too, because I'm here. Sorry. So I'd like to ask you another question, because I have a question that that is here. Only one moment, because I think this question is also relevant for our audience. Sorry, and but basically the main question and why the people are here, it will be how can you make money with Bitcoin Perpetuals? And I see here like several 4 options. And I want to make sure that I understand completely, and also our audience choose an answer. And I see here, sell your short contract. So you can make money if you sell your short contract if the price is higher than the purchase price. Sell your long contract if the price is higher than the purchase price. Be in a short position when the funding rate is positive. Be in a long position when the funding rate is positive. So please, our dear audience, give also an answer. What is your option? What is the correct answer from your point of view? Because we want to make sure that how we can explain you better. So I give you a few seconds. So in the meantime, I'm gonna drink some tea. I hope you do the same, or a coffee, but because it's early in the morning. Success people, they wake up early. So I give you a few seconds. Until now, I see that 60% voted sell your contract if the price is higher than the purchase price. And now it's 50-50%. So some of you say that you can make money with Bitcoin short your contract if the price is higher than the purchase price. And some of you say that if you sell your contract long, if the price is higher than the purchase price. So basically 2 options right now, 50-50. The answer is in between. We wait for a few seconds, so to give the opportunity to answer to anyone else. And then we'll explain why. So what will be the correct answer? So, okay, so I'll share the pool. So share the results, and I would like to know, Guido, what will be the correct answer and why.
Yeah, so one thing in between, I see that my dear friend Thomas just joined us. For your understanding, Thomas plays in the same basketball team as me. So Thomas, if you didn't answer this question correctly, I'm going to dunk on you, but that's completely something different. The 2 correct answers are B and C. So when you sell a long contract, the price, should be higher than the purchase price. And C is also correct, but being in a short position when the funding rate is positive.
Okay, let's continue with this. Okay, perfect. Let's continue with the presentation.
Yeah, let's do that. All right. So I think this is a good moment. Sorry?
So it's about monetization.
Yeah, so indeed. So I think it's a good moment to start talking about monetization. If you own a Bitcoin, you can sell it at a profit once the value is higher than your purchase price. And nowadays, there are plenty of options to exchange your Bitcoin for fiat, such as euros and dollars, as well as other cryptocurrencies like Ethereum. But if you're not planning to sell your Bitcoin for a long time, you could also lend it on some Bitcoin lending platform. And guys, are you aware of this opportunity? Basically, the concept of lending remains the same as the traditional ones, but the only difference here is that you get crypto dividends instead of cash dividends. So it's a very, very modern lending system. All right, all of this is nice, but how do you make money with Bitcoin Perpetuals? In this case, you need to sell your contract if the Bitcoin price rises or falls. So if you hold a short contract, you sell it if the price is lower than the purchase price. And conversely, a long contract can only be closed successfully when the market price is higher than the purchase price. So by now you know that compared to buying and selling Bitcoin spot, Bitcoin Perpetuals trading gives you the opportunity to make money in both directions, which is very handy given Bitcoin's volatile price movements. Oh, by the way, one last thing, there's another way to make money with Bitcoin Perpetual futures, and that's through the funding rate. Funding rates are basically interest rates paid on positions in futures. And the standard funding rate is 0.0%. When the funding is positive, longs pay shorts to be in a position. And when the funding is negative, the shorts pay the longs to be in a position. All right, so I hope you guys now understand the purpose of the funding principle. So what it basically does, it ensures that the balance between the amount of longs and shorts remains exactly the same by punishing the party that's in the upper hand. So the bigger the difference between the longs and the short becomes, the higher the funding becomes. And this encourages traders to take a position against the majority. Like for example, if there's a rise in positive funding, you'll be increasingly rewarded for being in a short position. All right, guys, my dear money magnets, following monetization, a logical step is to discuss the costs involved in BTC spot and BTC Perpetual trading. When trading Bitcoin spot, you will likely have to pay your broker a transaction fee. Sometimes there are these special periods, right, where you don't have to pay a fee, but usually you have to pay a transaction fee. And the same actually goes for Bitcoin Perpetual futures, except that it also comes with a funding fee, which we just explained, and also a liquidation fee in case the position gets liquidated. All right, Florian, what do you think of this?
Well, this is amazing until now. I'm so excited about this. I'm so blessed by with this training, and I hope also our audience likes this training. And by the way, all your questions will be addressed after the webinar and at the end of the webinar with a Q&A session. And you can continue asking more questions. I think we should go to the next slide and talk about market trends and explain a little bit more because time is running and it's important to go further.
Yeah, let's go this. All right, so let's move to the trends. We all know the saying, the trend is your friend, and it definitely also applies to this sheet. So when you decide to start trading Bitcoin Perpetuals, you are really not alone. There are millions of traders that preceded you. You know, a growing number of traders are monetizing this financial product, and this is because Bitcoin Perpetual futures allows you to make money in both directions, as we just explained. This is super relevant since Bitcoin's bear markets could last more than 3 times as long as the bull markets. And you know, believe it or not, currently more than 800 billion USD worth of Bitcoin Perpetual contracts are traded on a daily basis. As you can see on this line chart, there's more than 8 times as much as trading Bitcoin spot. All right, Florian, before I continue with the next trend, is there anything you would like to add here?
Well, just a second, please. 1 second to stop the share screen. And I have a question because it's important to make sure that I understand completely. Okay, so only one moment, please. So I'd like to understand my dear audience, if you understand the funding principle. What is a funding principle? And I'd like you to explain me what is a funding principle because I need more help. And also I'd like to understand from the audience, if you can answer in the questions and answer, what is your risk appetite? Are you willing to take the risks that come with this amazing opportunity? Yes, no, or not ready yet, and I need more info. Please answer in the Q&A session that is on the bottom of this webinar. Okay, let's give you a few seconds so you can have time to answer. In the Q&A session, you have the option to answer to the question or give the answer. Okay, so I see that someone already asked, said that he want to know more about the risk and like to take this, but also with a reliable guidance. Someone else also answered that he's already an experienced investor in the futures. So we have here 2 different situations: someone that need more help and need more guidance, and also instructions and someone that is already an expert, and here he needs more technical information. So I leave it to you, the word Guido, to explain to both these two situations. Yeah.
Yeah, let's do that. So I know when we go back again to the trend slide.
Okay, just a second to go to the slide. 1 second. 1 second. Thank you very much, guys, for taking the time to answer into this Q&A session. Just a second to share the screen. Okay, perfect. Let's continue. So we are here in the market trends.
Yeah, that's great. Okay, so as per the slide, the rise of Bitcoin derivatives goes hand in hand with another exciting trend, and that's the rise of trading algorithms. So let me tell you a bit of history. In 1972, the New York Stock Exchange was the first to support algorithmic trading. They came up with a so-called designated order turnaround system, DOT. In a nutshell, this routed orders electronically to the proper trading post, which executed them manually. However, it took until the beginning of the 21st century before computer-driven trades really lift off. This may have been triggered by the US Securities and Exchange Commission in 2001, because that year they mandated all exchanges to convert to a so-called decimation system, which basically changed the minimum price movement of an asset from 1/16th of a dollar to $0.01 per share, because it was really a groundbreaking event. And this may have encouraged algorithmic trading as it changed the market structure by permitting smaller differences between the buy and sell prices and thus increasing market liquidity. Consequently, technological developments in the financial market accelerate on steroids. In 2011, for example, it was the year of the launch of nano-trading technology. A firm called Finetix developed a microchip that can execute trades in nanoseconds, which is, believe it or not, equal to 1 billionth of a second. It's quite amazing when you think about it. So, Florian, well, do you have any more questions for the audience?
Right now, just a second, please, to stop the share screen. I have another question, because I'm putting myself in the skin of someone that needs help, and I also need more information. And so I would like to ask you, because I think we are all human beings. Do you want also to make money when the market goes south? Yes, I become scared. Another option is that I become scared when the market goes south and I need more info. So please answer in the Q&A session on the bottom of this webinar. What is your situation? What is your, how do you feel about risks and situations that are not always positive? Please answer in the quick Q&A session. We'd like to understand what is your risk profile. Yeah, in the Q&A, you can give the answer. Okay, so if you have any question, then we can at the end of the webinar we can. Okay. Yeah, I like what you said, Thomas. Yes, no gain without risk, but hedging risk is important to me, definitely. That's why Guido will explain a little bit more in the next slides exactly what are how to manage risk properly. I think this is very important. Yeah. So and Marie said that she's a short seller. Amazing. That's why algorithmic trading can work, because we are human beings who do not have time to be so efficient, like more than what is than an algorithm. So in this case, please, Guido, let's continue and then let's explain on this situation how the algorithmic trading will hedge the risks, and how you can actually be efficient when you do short selling using the algorithm.
Yeah, I think that's a very valid question. I'm definitely going to answer it, but before we do that, I still want to tell a bit more about the technology part, especially about the last trend we were discussing, because it's true. Technology developments go hand in hand with risk, and I'm very happy that our audience understands these risks. But what I want to emphasize on is that these groundbreaking technology developments, they've also made sure that a growing number of algo service providers entered the space. Think of the many platforms on which you can build algos and make use of developers. And yeah, in my opinion, all of this, which we just discussed, has ensured that more than 80% of all trades are performed by algos. So if that's the case, guys, I mean, you must be really, really aware of everything that's involved. Yes, it's risk management, but it's also technology and, you know, perhaps even finding the right partners to support you if you don't know how to do everything by yourself. So I think now it's a great moment to move all the way to the infrastructure. Let's do that.
Yeah, we are here. Infrastructure, we are already here.
We are. Perfect. Yeah. All right. So I was like, you know, I think that the best way to show you the importance of an infrastructure is to demonstrate to you how Oxydo Capital is using their own IT infrastructure. So basically, we have 4 layers. We got the trading view, we got the VPS hosting, we got the middleware, and we got the exchanges. And I want to discuss with, I want to start with TradingView. All right, so TradingView, if you don't understand what it is an online platform for traders with over 10 million users. It was founded in 2011 and it has headquarters in New York and London. It offers several tools to analyze financial markets and exchanges ideas with other people. And you know, we selected TradingView as a premier trading platform for the following 8 reasons. First of all, it has an outstanding performance. You know, it's a rock-solid platform with virtually no downtime, and this assures us that our trading algo remains stable. The secondly, and I should definitely look at the eyes of my business partner Jarno, we absolutely love PineScript. It's a compact programming language which can be applied and managed easily. If something in our trading algo needs to be changed, Pine allows us to do this in a really, really fast and accurate manner. And thirdly, it's super scalable. TradingView offers premium users the opportunity to run a limited amount of algo scripts on the platform. And there are absolutely no limitations on how buy and sell signals are being generated. And because of this, Oxydo Capital is able to run multiple algorithms on TradingView simultaneously. And you know, I'm a big design freak, so for me it's really important that things look amazing. And you know, TradingView has something called an HTML chart. And this basically is a very, very nice visual, a very nice front end to help you create a trading algorithm. And in a bit later, I'm going to explain you and show you how this looks like in TradingView, and you'll be amazed. So now let's go to the 6th reason, and that's the backtest functionality. Let me explain this. So to make a trading algorithm work, the rules need to be tested thoroughly based on historical data. This procedure is called backtesting. The outcome of this procedure, the backtest results, give a fair estimation of the potential success of your trading strategy. And for us, TradingView's backtest environment contains all necessary features to test and improve our trading algorithm on a continuous basis. Now, lastly, it's also important, TradingView also offers great integration possibilities. This can be done through something called webhooks, which are basically a way for applications to communicate between them automatically. So I think by now you have a certain idea of our IT infrastructure. And I think, Florian, you know, because of the shortage of time, I actually would like to move straight away to our TradingView backtest. Is that okay with you?
Perfect. So basically, you want to share the screen, right?
Yeah, I'm going to share my screen.
Share the screen and let's go how to make the money.
Yeah, 1 second. The host has disabled participant screen, so you need to give me.
Okay, sorry about that. Just a second. Apologies about that. Sorry, I'm so sorry. Just a second.
Ford is a true friend, right? I mean, he wanted to kick me out live. Well, we'll talk about this later, my friend.
Yeah, no, all done. Yeah, amazing.
All right, we're all done. 1 second. Yeah, here we go. All right, guys. So what you're seeing here, this is basically our beating heart. You know, this is our bread and butter. This is everything that we wake up for. So basically, the most important feature of this algorithm is the range. So you got the top side, you got the downside, and you got the range median. And this, by the way, is for the trading pair BTC-USDT Perpetual futures on Bybit. You know, one of the most popular exchanges and also one of my personal favorites. So what you're seeing here, we see it live in action, right? Bitcoin went short on the 13th of December because the range broke to the downside. The other way around, like for example, on the 6th of December, the range broke to the upside, and as a result, it went long. So this algorithm, you know, can make you money in both directions. You can go both long, and you can go both short. So when the range breaks further down, it takes profit. For example, it takes micro take profits, which basically takes 5% of the position, but it also takes a partial take profit and even a dynamic take profit. So yeah, this algo makes sure that when the market goes in the right direction, it continuously takes profit. What also really important is this black line. This black line is the stop loss, and the stop loss moves along with the range. So what you're seeing here is that when the price breaks down, the stop loss also breaks down. A very, very important element of trading, especially algorithmic trading, is risk management. So I just explained the stop loss feature, but we have more. Like, for example, we also trade with something called isolated margin. An isolated margin basically means that you will never lose more than the capital that you invest. And we trade an isolated margin of 10%, meaning that if you own a position of $100,000 and the isolated margin will be not more than 10%, you will never lose more than $10,000. And you will only lose that if the stop loss doesn't work, our fallback stop loss doesn't work, if the servers of the exchange go down. So it's a very, very small chance, but we're still taking account of it. Furthermore, we're also trading with leverage. We're trading with 20x leverage, but we are not using it as a gambling mechanism, what a lot of people do, right? They go 100x and then have a very, very bad bad story to their partner at night, when things don't go their way. Or you can use it as a risk management tool. And we basically use risk management as a way to not have to invest all of the money by ourselves. So for example, okay, we invest $10,000 of our own, but we lend $90,000 from the market. And you can only do this if you work with a tight stop loss. And our stop loss is always set at 4%. So in other words, you can never lose more than 4% on your total position. So yeah, now you have an idea of how this sexy front end of TradingView looks. You also have an understanding of the main features of a trader algorithm. So I think it's time, Florian, to move to the performance. How does this thing perform? Let's see. I'm going to stop my screen now, and I'm going to give you the possibility to switch again. Florian, I don't hear you.
Apologies, sorry. I'll share my screen now. Just a second.
Yeah, sure.
1 second.
But it was the only time that you were silent. It's a new experience for me.
Yeah. Okay. So let's continue with this. Should we stay with the infrastructure?
No, we go all the way to the performance, because in the end, guys, that's all. Okay. Yeah, sheet number 10. There we go.
Okay, just a second. We are there.
Okay, it's loading. Okay, guys. So I'm also going to put my video off because it looks like the heavy processing has been done. So the first thing that probably spots your eye is the total performance right on top. Believe it or not, it's really true. Our algorithm made 2,268% since January 2019. This was not an easy ride, because what you also see is that our algo also had some losing months, right? For example, in July 2019 and also August 2019, it did respectively -4% and -13%. And if you would have quit down, you would have missed a very, very nice ride, because as you see, after that period, wow, it did 28%, 9%, 28%. And guys, look at 2020. In 2020, this beast made 59 to 18%. So this illustrates the importance of just letting this run. If you have a working strategy and you believe in it, don't kill it when you have a bad month. Keep it running and take optimum advantage of the compounding effect. What's very important that if you're going to develop your own algorithm, or if you are planning on licensing or buying algorithm from another party, a very important element is something called drawdown. Drawdown is basically the maximum amount, the maximum percentage that an algo can lose. So if you would invest $100,000 based on a drawdown of 24%, this 100K could have been $76,000 at one point. But 24%, in my opinion, in a very volatile market as the derivatives market, is nothing compared to the money you can make. So whenever you approach a developer, you ask, hey, listen up, share me your profits, but also share me your drawdown. Because if the drawdown is 50%, they're just gambling with your your money. So yeah, now you have an idea about the performance. You know about our trading algo. So let's move to the next sheet, Florian.
Awesome. Yes, we are here.
Yeah. So the challenges, you know, and we've already discussed several of them. Zero IT knowledge. There were some people here that had no IT knowledge at all, and others know a lot about this topic. If you don't have any IT knowledge, yes, you can study it yourself. I mean, my business partner studied PineScript for over 6 years. But if you don't want to reinvent the wheel, you could consider outsourcing it to a professional party. Another very important challenge is being a trader, not a trader. You know, as a trader, I've made lots of stupid mistakes that I could never have learned from a book. You know, for example, how to deal with your emotions, how to apply risk management, and all of these learning experience and also mistakes I've basically incorporated together with Jarno in an algorithm. So if you're not a trader, it's very difficult to become successful with algorithmic trading. Another thing is diversification.
Just sorry, Guido, for interrupting you. It's just what I just want to say to our audience. What impressed me, the asset under management that you already work with people, and I think this is awesome. And sorry for interrupting you.
Yeah, no, it's okay. It's always good to interrupt me because it means that something good is going on. So you need to make sure you diversify. You know, diversify not only with all of your assets, buy some real estate, buy some stock. But you also have to do the same with algorithmic trading, in my perspective. So if you pick us, you know. Consider our algo, but also look around and compare, you know, compare the drawdown, compare the performance, and so on. And I think, you know, one of the biggest challenges that many traders are facing is how can we capitalize on a downtrending market? You know, by now it looks like that every asset is topped out. Where you look at the, you know, when you look at the S&P, even when you look at Bitcoin. So there's a very, very likelihood that the market will go down, and that's where algorithmic trading steps in, because then you can also make money on the way down. So yeah, so these are the challenges, and let's move to the next sheet.
Awesome. Let's just a second to go to the next one.
Yeah. Okay, guys. So pay close attention, right? I mean, this video call was a lot of improvisation. We had some fun and laughter, but you need to remember these points, because these are basically the keys to success. You know, to come up with this, I had to go through 18 years of hassle. So the first point is choose one or more reliable Bitcoin futures platforms with high liquidity and low fees. This is very important. Bybit is great if you're allowed to trade there. Bybit, Binance is the #1 platform. FTX, it's regulated, it's very popular institutional. So, you know, do your own research and pick a platform with high liquidity and low fees, because low fees are more important ever for algorithmic trading. Yeah, so in the Florian, you know, he always knows what I'm thinking. Here you see these platforms. OKX is amazing. Huobi is also worth looking in. So yeah, do some research. Now let's go back to the other points. Thank you very much.
Yeah.
So the second one, use unique trader strategy with tight risk management. You know, don't fall for this algo that's being used by thousands of people, because the impact on the market of such algo will be big, and you're bound to get screwed. You know, sorry for my wording, but be careful about that. So in our case, and especially in case of Jarno, we came up with this unique range maker method, and because of this, we have a unique strategy. We cannot be copied, and we combine it with tight risk management, and it's working like a charm. The third one is, you know, don't be a one-trick pony. When you have a strategy working on Bitcoin futures, also try to validate it on other asset classes like stock CFDs. That's what we have done. Like, our algo is not only working on Bitcoin futures, but also working on commodities like gold. It's working on Amazon. It's working on Tesla. You name it. So in this way, you know, we know that once we are fully booked with derivatives, we can easily scale up to other assets. And the fourth one, and this is super important, make use of a solid infrastructure. Even if you're going to select another algo provider, ask them to show them the infrastructure. How does it work? How is the performance? Where is it being hosted? Is it being hosted in Thailand when the exchange in England, or is it being hosted in Amsterdam, for example, when it's in, when the server when the exchange is in England? So infrastructure is really important. And the last important point is you need to decide what you want to do yourself and what you want to outsource.
Yeah, just I would like also to, because you said about the first step TradingView and the VPS hosting, I think it would be interesting to emphasize what are the stepping stones, like the building stones of the whole project, because just to like VPS host middleware, because I love the technology and I think it's important to have the right tools to work with the algorithmic trading.
Yeah, I think that's good. So we already discussed TradingView. Now, the third element is called middleware. And middleware basically is the bridge between TradingView and the exchanges. So what middleware does is that TradingView generates the trading signals. These TradingView signals are being processed by the middleware layer and sent through the exchanges. And on the exchanges, these buy and sell signals are converted into orders. So in other words, from TradingView, middleware layer, exchanges, this whole procedure takes place and everything is running on VPS hosting. And VPS hosting is basically a server, that takes care of all the computing power. And we are using the VPS hosting service of TransitPay. Why? Because they're also based in Amsterdam. When there's something, we know the managing director, we can call them personally. So this also underlines it's really, really important that you know about the underlying infrastructure, about the hosting, about the middleware layer, and so on. And because we don't want to be too dependent on other companies, we basically build our own middleware layer. Because again, it's our bread and butter. And we don't want other people to screw our party.
Okay, and is it? I think also the trading algo, like the range.
I just explained the range for, and now I want to go to the last sheet. Yeah, great. Okay, so we ended the last point of the previous sheet with are you going to outsource, or are you going to everything by yourself? If you're the guy that's really busy, maybe you have a family, maybe you have a dog, maybe you got 2 or 3 jobs. I don't know your situation, but if you're busy and still want to make money with Bitcoin derivatives, you might want to look into our signal service. So with our signal service, you basically can make money with Bitcoin derivatives all day long. The signals are produced by our trading algo, and all you have to do is open an investment account on one of the usual suspects, which we just described, Binance, Futures, Bybit, you name it. Open investment account, fund it, create an API key, and with the API key, we can make sure that the buy and sell signals from TradingView are being sent to your investment account, where they are being automatically converted into orders. So we can help you make money with Bitcoin derivatives in an automated way. Another good thing is that we only send you a bill if you make money, because we work based on no cure, no pay. So for example, if you would invest in $60,000, the fee would be 35%, sorry. If you would invest $2 million, for example, the fee would be 25%. So it goes lower if you invest more capital. Also, you can unsubscribe in case of paid plan on monthly basis. So if you're like, hey, in July you did a negative month, September was also a little bit shitty, I don't trust it, you simply pull the plug and you're gone. And because we are so confident about our product, we offer you the opportunity to test this out free of charge with our free trial. So with the free trial, you only need $1,000 to test it out. And yeah, you can test it out for a month, and we're available for questions, for demos. We are here to show you that we are the real deal.
Awesome, Guido. I'm so impressed, and I really love the technology. I love the fact that we take a lot of the stress that usually a trader have, especially when you do trading. And Perpetuals is something that gives you leverage. So if you definitely you need an algorithm that works if you want to have a leverage and if you want to work on a bigger plan. Basically at a different level, because until I did not understood what is the difference between Bitcoin spot trading and Bitcoin perpetual trading. Now I'm so excited that I understood, and I'm so thankful to you that you taught me and you explained me how it works and what is the benefit, and also what are the risks of the leverage that you have with the Bitcoin perpetuals. And I hope also that our audience today have understood. And if you have any question, please ask in the Q&A. We have 10 minutes left, 9 minutes more exactly left for the Q&A session. So please ask any questions that you might have, and we'll answer to you. I think it was a very interesting webinar, Guido. So I'm so excited. It's the first webinar that we are doing, and we need to celebrate this out of a series of the webinars that we plan to do and become more experts. If we, by any chance, if it was not clear enough, please excuse us. And we worked so much to make sure that we arrive at this point, and we are we're giving you a lot of value. So Guido, I'm so happy that I have met you, and I'm so happy also for the audience that come here today. And for people that did not come in the webinar, also the audience. Some of them they had some personal problems, they could not participate, but they are looking to receive the recording of the webinar. So even to the people that are not here, also I'd like to say thank you for taking the time to watch this recording, and for the people that are in the webinar, thank you very much for your time. I see that we have some questions. Let's see some questions here. Okay, so which platform we have a question? Which platform do you recommend to begin? You mentioned Binance. Is this a good starting point? This is one first question.
Okay, so when you mean with begin, you mean beginning to trade Bitcoin perpetual futures, right?
I think this would be the question. Yeah, I think this is what he means.
And of course, another question is: are you going to trade manually, or are you going to trade automatically? So what's really important is that you make use of a platform that support isolated margin. You know, because if the platform doesn't support isolated margin, you could lose all of your money. So the first thing is, you know, look at the risk management. You know, the way they support risk management. My personal favorite is Bybit. Is it a good way to start? Absolutely. Why? It has the lowest fees. It does support isolated margin. The API connection is super stable. I mean, for example, we never had downtime with Bybit or any other crazy stuff. Their support is also amazing. So I would definitely look into Bybit. Another good option is FTX. FTX is a platform that's chosen mainly by institutional parties. Why? Because they are regulated and have a very, very easy infrastructure, and also a good API. But, you know, for me, one of the most important elements is the fee structure, and the fee structure of FTX is a bit higher than Bybit. So yeah, this is why I recommend Bybit.
Awesome. Let's pass to another question that the audience have. Could you please elaborate a little bit more about the risks and potential downsides? Bitcoin market was very volatile lately. This is the best moment to do perpetuals, Bitcoin perpetuals. So I leave the answer to you, Guido.
Yeah. Okay. The whole thing is the Bitcoin market is a market that goes on 24/7. So, in my opinion, if you have a good algo, it should be able to handle every market situation, right? It should be able to handle high volatility, sideways movements. So, you know, our algo is specifically designed to cope with all of these market situations. Right now, the market is very volatile. As you know, 2 weeks ago, we had the major crash, right? From $60,000 to 40,000. It's not a great period right now to be long. in my perspective. You know, I rather want to sit this out if you want to trade long and see where this is heading. But if Bitcoin would go to $57,000 and, for example, dumps, yeah, you might want to consider opening a short. Of course, it's not financial advice, but in my opinion, this is a great time to trade and to be alive.
Yeah, I remember last year what happened in January. If we repeat the story of last year in January, I think will be probably, I don't know, it's just a guessing, 100K. Anyway, let's go to another question. So just the guessing, you know. So another question. Also, there is a good place to learn about derivatives in more detail, preferable for beginners. So yeah.
Yeah.
So someone else is asking about for a beginner. So basically wants to spend more time.
I think what I'm going to do is that send me a message after this meeting, and I'll spend a half hour, you know, to teaching you the basic principles of Bitcoin futures trading. I think that's best.
Okay. So another question: will BTC become a stable coin in the future, and will fiat currency be devaluated by crypto in the future?
You know, Daljit, thanks for your question. A little bit more than 4 months ago, when institutional parties entered the game, most of the traders, including me, expected that the volatility would go down, you know, but instead of that, you know, this market has only become more volatile. So what I'm seeing right now is that the volume increases, but it remains volatile. And the reason why it's so volatile is because this market is being ruled by Bitcoin derivatives. You know, as I've told before, the derivatives take account of the majority of all of the trading activities in the crypto market, right? It exceeds the spot market with a factor 8. So as long as this game is being ruled by derivatives, and as long as Bitcoin has cycles, right? Cycles goes up, cycle goes down, which is always the case. We're going to have nice volatility, in my opinion.
Okay, let's go to another question. Thank you very much for the answer, Guido. I'm so excited about the people that are asking questions. It means that you have an interest. So okay, thank you very much.
By the way, there's one more question. He also asks, Daljit, thank you. And will fiat currency be devaluated by crypto in the future? Yeah, it's a very interesting question. Like what you're seeing right now, that a lot of countries they come up with their own digital asset, right? Their own country stable coin. But what we are seeing is that lots of institutional parties are becoming our clients. We have banks, for example, that are using our service. So as long as the big parties will use Bitcoin, Bitcoin itself is not going to away. When it comes to fiat, well, I don't see that everyone will pay with Bitcoin in the forthcoming years, right? It will gradually improve. And again, you know, El Salvador was a great milestone, you know, being the first country to officially make it their asset. But I don't see it happening. I don't see fiat currency be developed by crypto in the future. I see it live right next to each other. Yeah,
because the crypto have a function and the fiat have another function, so it's important to be balanced between these two. And another question, so where do I sign up? Yeah.
So where do you sign up? I think you can sign up with Florin, right? Maybe you can explain what you had in mind.
Yeah, definitely. We'll get back to you, Jeremy, and we'll send you a link. Let me take notes of it. Guido, can you make a photo screenshot about the question of Jeremy, so to remember to get back in contact with him?
Yeah. Let's do that.
Perfect.
So,
after
the meeting, so basically after the meeting, when you
yes, we'll get in contact with you.
Send us a message, and we're going to send you everything. We're going to send you detailed information. Sorry,
yeah, yes, definitely. We'll send you more information after this meeting. And I see that we are almost 10 o'clock, and Thomas is also thanking us the presentation. You're welcome to all of you. Thank you very much for your time for participating here. I hope it was a lot of value added, and we are looking to answer to any questions that you have. And also thank you very much to the people that are watching this live on YouTube. Thank you very much, and I hope you enjoy it. Also to the people that will watch the replay of this webinar. Thank you very much for your time, and if you have any questions, do not hesitate to get in contact with us and ask any questions to me or Guido. Thank you very much for your time. Guido, it was such an enlightening experience, and I'm looking forward to continue to learn from you and adding value to each other, and also adding value to our audience. Thank you very much for your time to all of you.
Thank you, guys. Enjoy your day. Bye-bye.
Bye-bye. Thank you. Let's see here.